Let's see an example of falling trend line. We are on the Britannia on hourly time frame. Hourly time frame is my hourly time frame. So I'll be trading this stock on 15 minutes time frame. Okay. I am just switching up the time frame so that everyone can utilize this on their time frame of their liking. So here we can see the price started moving down. It was falling and did the first pullback. Okay, let's check whether the first pullback is satisfying a condition or not. As you can see, the first pullback came just touching the 50% line. Okay, normally what we want our price to do something like this, you know, come above 50%, but here it's just touching the 50%. So here if you want to draw a trend line, you have to be a bit flexible while drawing the trend line. Okay, so like this. So our trend line will go like this, will look like this. As you can see, if I zoom out the chart, as you can see, price did first touch, second touch, crossed the trend line here but couldn't sustain, and very next day came back below the trend line. Okay, now here price is staying near the trend line, broke down here, testing the trend line again. So we have 4 touches plus 1 fake out move above the trend line. Okay, so let's move on to the 15 minutes time frame to analyze this, how you can trade this. Okay, one more thing, if you check on the hourly, how much void we have here. If the void is bigger, your cross trend line will perform better. If the void is smaller, your cross trend line may perform bit, bit risk. That trading based on cross trend line with bit will become bit riskier. So let's go on to 15 minutes and see. So as soon as we draw the trend line based on these 2 points, like this was the first point, after this the first pullback, when the price starts going down, we will have our trend line after this particular point. So let's go on to 15 again. This was my second, this was first point, second point, and after this point I'll have my trend line. Okay, now as the price is falling from trend line, you may want to initiate your short trades. Okay, but here as you can see, the price came down and immediately such a strong pullback is happening. But if you check at the volumes are comparatively less. Here you can compare this with this. So when the pullback, such a strong pullback, such a sharp move is happening with very less volumes, that's your first signal that trend, this rally may not sustain. And the first thing you can do is you can plot a support resistance line. Here the price was taking support resistance, then took support here, 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 here. While breaking, it took support and finally it broke down with heavy volume. This dot represents the volume is above its 20 candles average. Okay, so as soon as it breaks and comes back and you see this shallow rally, immediately here you will place your order and your stop loss will be here. Those who believe in risk to reward ratio, they can see how much risk to reward we are getting. Okay, then after that the price came down, thus almost some pullback, tries to go down but unable to go down and bounces back up. As you notice, the price is unable to break this low. Whereas initially my highs were getting lower, then again highs went up, but again coming lower. This indicates that selling pressure is there in the market. If you spot that in time, you may look for your trade somewhere here, here, or here. Sorry, I am extremely sorry. After this particular, like the highs, from this becomes my lower high, this becomes my lower high, but after that I'm going to have a higher high. After making higher high, when you see such kind of bars and such kind of wicks, this clearly indicates there is a weakness in price. In such situations, you should not jump for your trades immediately, but you should wait for a proper pullback to happen. Okay, if you trade this pullback, your rewards are a bit limited because already we know price is unable to break this low. Okay, so now you are waiting for the proper pullback which happened here. So let's move on and see what happens after that. Here you may want to initiate your trade, and if you do, your stop loss will get triggered, no doubt in that. Okay, see, in trading nobody can achieve 100% accuracy. Your accuracy should be above 60 to 70% with risk to reward considerably based on your personality. So price went up. Here we may think that my trend line is broken. Okay, sorry, I have to pause the video. So when price broke out of the trend line, you may think that trend line is broken. Okay, now we are waiting for price action to emerge for further action, but as you can see, price went up trying to sustain over here, but very next day came back crashing down below this trend line. So after you see such move, you can simply say that this move was just a bull trap where they trap all the buyers and price immediately came back down. Okay, now let's move ahead. Now when after price is coming down, my price is still holding the lows of this particular point. This was the lows which price was unable to break, and after that price is taking resistance at this particular line. So this line will become your SNR. SNR means support and resistance line. Okay, so now you are waiting for this move to emerge, and as you can see, a trading range is established here where the price is moving, and as soon as it breaks you may take your entry. Either on the breakout or on the first pullback you may take your entry. Okay, now price sustains below, moves below trying to sustain but unable to make the new lows. This situation you may see that a counter trend is possible and you may look for the counter trend trades. Unless and until you have expertise or you know what you are doing, taking a trade against the trend is not advisable. Now, if I draw a cross trend line like this, ignoring this particular wicks, or even if you want you can add this, price back down, without doing a retest it goes down and it does a first pullback. Okay, taking a trade here as soon as the price crosses the cross line is possible, but it is risky. So keep your quantities or keep your risks under your in manageable situation, manageable state. Then price move down, tries to sustain, next day at open immediately moves down. Now you can see the distance of this move is far bigger than the previous move. So the void between the trend line is higher, So here you can assume that seller may not go further down. As you can see, seller actually never did go after this below this point. They did first retracement and after that they broke down. So after breaking down they moved even higher. Even this particular space is too much, even higher than last time, previous time, and that way highest, and now the price is doing a pullback. So for the next week, if you draw a cross line like this and wait for the price action to emerge, you may see a trade is forming. So on to the next example.